Hey there, keen traders. I hope everything's going okay. It has been a rather interesting day. We had the drop down with the initial release of the Yellen testimony, and now since she has been speaking to the Congress, everything has gone back to its previous levels. But let's take a look at what's going on. Let's first start off with the stacker trade setups. Hopefully, it looks like we could have a bit of opportunity in the very near future. The Aussie USD. Actually, let's take a look at that one trade that I have going on right now. If we look at the daily chart in the Aussie, you can see that this pair has been pushing lower on this descending trend line, and I had been looking for a push up to the 90-30 level because there's a nice harmonic setup at that point, and the pair did press up to that level today. Both levels do coincide, so we'll see what I want short at. I think it was 90.29, looking for a push back down. All the way back towards the bottom of the range. Let's take a look at the harmonic setup layout. It's a butterfly pattern, but it could also emerge into a bat pattern. But I like the idea that there's more than one level in play here. You can see that because we have the ascending trend line that coincides, so we have the multiple fib levels from the butterfly. We can definitely get rid of emerging. Actually, the first place that you should have gone into this trade if you were going to play a clean cut was right here at this 89.30 level, but I'm not interested in that. I wanted to just have a small risk reward, but I guess if we look on a more larger daily chart, you can see there could be a bat pattern emerging here. That's the problem with harmonic trades, is they can morph into one or the other, but one will ultimately work. So what we see here is we see that we have the push, we have the bat, and we see the fib levels on the AB level is 73 fib, and the extension is the 113 at the D, and now I'm pretty sure we're at the 1.62 extension of the XA move down. So we'll have to keep a lookout here. Hopefully we get the reversal, and if we do, I will be looking for a pushback all the way down towards the 87 level. But once the pair does get 50 fibs up, or we basically break this range right here at the 89.90 level, that would be an opportunity to move the pair to break even. The stop currently is 5 pips over this level at 90.65, and that is what I'm watching for in that cross. Let's just take a look if I have any more harmonic setups. I haven't actually looked at this in a bit in play. We can see that was a Great Britain pound harmonic trade that didn't trigger, pushed back up, and if I think there might be something live in the JPY, yeah, we had that push back down towards that 101, 101.60, 101.50 level, and you can see that actually this trade worked out very well. If we had taken it, you can see that the cross is all the way up, well, not very well. It's up about 120 pips. That doesn't mean anything nowadays. All right, so let's go take a look at the layups. We'll first start off with the stacker trades, and then we might have some opportunities in the Great Britain JPY in the very short term. And actually, if I'm looking through the charts today, I was doing some maintenance on the website this morning. Looking through the charts today, I do see some interesting, so just a different perspective on the JPY pair and the Great Britain JPY, and it's just a different way to look at it. Let's start off with the stacker trades. Because the Euro USD is a little bit interesting this morning. And when was the last time we thought one of these trades were interesting? You can see that the pair is attempting to break this ascending trend line, and we have that range between the 134.75 and 137.40, but now that the pair is above this level, this could be 136.40. Clean cut. We could look for a pullback here to stack into, going higher, looking for a tough break up towards the 139 level. I will be watching for the daily close and then putting my order in, depending on what we get here on this close. So we'll have to wait. My close is at the 5 p.m. Eastern time, so I guess that would be 5 p.m. Eastern time, which would be 19. Which would be 17, and then you'd add GMT. It's going to be pretty late in the day, 22 GMT, I believe. So let's take a look, though. So I'm looking for a hold of this trend level, a hold of this break of the ascending trend line, and I guess we still would just be testing the top of the range, but it might be worth a nice move, and I'd like to get back into these stacker trades. Driving me nuts being sidelined in these. The Great Britain USD, same thing. We're sitting right about mid-range, though. Well, not the same thing. Still need a break of that 166.50, 163.10, 162.50 range before we could really get anything going in that cross. And the other pair that I look for in the stacker trades is the USD Swiss franc. You can see that that pair is channeling lower. Basically at this point, looking for a break of either, not worried about this trend line any longer. basically looking for a break of this 88.75 level, even though that is right there towards the top, the serious support level at 88.30 and 87.93, or a break of this trend line, or basically the 91.50, looking for a pushback higher. Very unusual for there to be such low activity in these pairs. Let's go to the rest of the majors. New Zealand USD, nice higher, broke that trend line. To keep pushing. 84.40 would be the target in that cross, and the USD JPY. Not much to say. I know people are stressing the fact that it's moving up past mid-range and seems to be pushing higher, but still, like I said on the weekend, over the weekend, is at 103.50, 103, 101.60, 101. This pair seems to be very much landlocked at the moment. The Euro JPY making a nice balance after breaking the 50 fib, taking the most damage with this. But let's look at what the setups we have in these in the 4-hour trades. Well, you can see that let's move everything around. This is, as you can see, the pair pushed higher, had a really nice reversal candle. Kind of regretting I didn't take that at 83.52, but that trade would have closed out today right here at 82.30. That would have been a nice 120 pips, but that really wasn't a trade setup. That would have just been something I saw. So what we're still doing is looking for a break of this range, or a pretty distinctive candle in one way or the other. Right now, right here, the trade would have shut out right here, but it's not convincing that it would have been looking for a break. I would look for a push above this level, and if I'm going to wait for that, I might as well wait for a push of this range. So I'm looking for a break of the 84.10 level or the 81.30 level in the short term. The Great Britain JPY, on the other hand, does look like we're going to get some action here in this cross. You can see this is Friday. I believe that's Friday 7. Just started watching this pair on Friday. Well, regressed it on Friday. Alright, so we can see that this is the non-farm payroll report, and then you can see we continued to kind of move higher. We had a nice reversal. So what we're looking for, you can see this right here. I thought we were going to get the jump in there. We need a break of that range. The range modifies. With that rejection. Let's just put it up like this. You can see that now we're going to look for a break of one of these two areas to get. Actually, I might wait for that to become interested in this cross. So looking for a break of either basically the 169 level or the 167.80 level. I'll post this on the blog, and so we could definitely get pushed into one of these trades at one point today, hopefully so. And I will go ahead and post all these results for the different months on the blog, so you guys can take a better look at the Great Britain JPY results. That's it today for Currency Watch. Keep a lookout for the feed, and everybody, good luck trading.